How to trade the RSI divergence like a pro, a part 2. How to trade the relative strength index or the RSI divergence like a pro, a part 2. Let's get started. In part 1, we were talking about where does a valid divergence occur. We have clarified to traders that a bullish divergence will take place at the end of a downtrend or at a valid support levels. Okay, a valid bearish divergence will take place at the end of a bullish trend and also at a valid resistance level. Okay, so we know exactly where does a valid divergence often or regularly take place. All right, this will allow us to filter out, okay, false divergences. Okay, talking about the relative strength index divergence, this time we want to answer a specific question: what are the different types of the RSI divergence? What are the different types of the relative strength index indicators divergence? Okay, pay attention carefully, because now we know exactly where we can expect a valid divergence. Now we want to know the different types of RSI divergences. Okay, the common divergence that you may already know is about a scenario when a financial instrument, okay, exhibits a higher high when the technical indicator, in this case the RSI indicator, exhibits a lower high. Okay, so a financial instrument displays a higher high, okay, but the RSI indicator failed to confirm the higher high, but instead has displayed a lower high. So we see now the financial instrument has displayed a higher high compared to this high here, follow my cursor, but the indicators has not displayed a new higher high, but instead has displayed a lower high. This is a very popular, okay, bearish divergence. The opposite is also true for a bullish divergence when a financial security has exhibited, okay, a lower low, but the indicator has displayed, okay, a higher low. All right, so the financial instrument, either a currency pair, a stock, a commodity, okay, went up and has displayed a new lower low. All right, but the RSI instead at that point in time has displayed a higher low. So the financial instrument has displayed a lower low, but the indicator has displayed a higher low. This is a conflicting information. Though the financial instrument went down more, the indicator did not go down more, but has in fact displayed a bullish pattern. All right, so the price is bearish while the indicator is bullish. This is a bullish divergence. All right. A bearish divergence is when the price is bullish but the indicator is bearish. In this case, the relative strength index is bearish by displaying a lower high, while the price bullish displaying a new higher high. This is a very popular, okay, divergence type. This is what most traders are looking for. But there are other types of RSI divergence. When there is a conflict between the market pattern, okay, so the price is in a rising channel, but the indicator is in a declining channel. All right, this is a bearish divergence. So this is another type of divergence. So we may see now that a currency pair or a stock or a commodity or a major index, okay, it is in a rising channel, okay, but the RSI, while the price is going up, the RSI is declining in a declining channel. Now, before you start getting a bit hitting your computer or getting a bit upset about what I've just said, you need to understand that the divergence is not a trading signal. I think that clarifies a very important point now. All right, now, a divergence is not a trading signal, but a trading setup. Now, when we see a bullish divergence or a bearish divergence, this is a trading setup. We will now implement what we call a multiple time frame trading method or a top-down trading method, okay, to trade it. So when I'm saying to you that there is a conflict between the true market pattern, the asset price market pattern, and the RSI indicator market pattern, which means a stock is in a rising channel, but the RSI or the relative strength index is in a declining channel. This is a bearish divergence. The opposite is also true, my friend, when, okay, this time the price is in a declining channel, but the RSI is in a rising channel. This is a bullish divergence. This is another type of divergence. So the first type, indicators displaying lower high, price displaying higher high, or indicator displaying higher low, but the price displaying lower low. All right. Second scenario, the indicator is in a declining channel, but the price is in a rising channel, or the indicator is in a rising channel, but the price is in a declining channel. You want to know the different types of divergence. As I explained to you, be careful. A divergence is not a trading signal, it's a trading setup. We're going to go a little bit deeper and it will become clearer to you as we are trying to show traders how to trade the relative strength index divergence like a pro, a part 2. The third type of divergence is when we have a change of speed. All right. This is something new to many traders. I understand, okay? I understand. I spend most of my year trying to understand these technical indicators and to figure out exactly what is working and what is not working in this messy market. The third type of RSI divergence is what I prefer to call discrepancy. By the way, I will be recording, a series of videos about the CCI discrepancies. Now, I invite traders to stay tuned and to subscribe to Daypro Traders channel so you do not miss out this series of videos about the CCI indicator discrepancies. In that series, I'll be talking about this type of divergence when we are talking about the speed, the different type of speed, which means either the price is going faster than the indicators, all right, or the price is going, at a lower speed than the indicators. Okay, it makes sense? This is another type of divergence. So we have three types of divergence. The first one here, I don't want to dwell on it, okay? We clarified it already. The second one is about something new that many traders do not know. It's about the market pattern, using the market pattern of the indicator and the market pattern of the asset or the financial instrument itself. And the third type of divergence is relating to the speed of, the RSI indicator, comparing the speed of the RSI indicator to the speed of the price. Now, by the way, talking about this type of, the third type of divergence, which I like to call discrepancy, it's a type of divergence. This type of divergence allow market traders to forecast the next price move. Sometimes this is what traders like to call a leading indicator, a leading signal, okay? All right, it's a powerful, divergence, but one must know how to trade these type of divergence. So in this part 2, all I am doing is to show you the different types of divergence. But we will be talking about how to trade it, how to identify the best bullish divergence. In that case, I will be talking about how to trade it, all right? And we'll go a little bit deeper. But if you want to know more about how to trade the RSI divergence, I can tell you now, when we see a divergence, is just giving us a warning, it's a trailing setup, we must now use a top-down trading method. To know also more about divergence trading, go to stochasticmoney.com, click on divergence. If you like this video, please give us the thumbs up. If you dislike it, please give us the thumbs down. If you love it, okay, please share it on Google+, on Twitter, and also on Facebook, okay? If you are in love with what we are doing here, okay, feel free to subscribe to Day Pro Traders YouTube channel and also to Day Pro Traders website. We are the TS RSI Pro Traders talking about, okay, how to trade the RSI Divergence like a pro, a part 2. Thank you for watching, and we will speak to you very soon. I would like to invite you now into part 3, where we'll be talking about how one can identify the best bullish RSI divergence. See you in part 3.